again on the Nifty. Let's get in a fundamental viewpoint as well. Varun's with us. Varun, when you look at a market which is at its year high, one always has to ask themselves the question, should I be buying more right now, or will that be a foolish strategy to adopt? What's the call you're giving out to your clients now?
Well, good afternoon. I think the market is trading close to 16-17 times FY11 earnings. Now, I think going forward, what is going to be key for a further re-rating of the market from these levels is how the earnings picture turns out to be. I think once we are very clear about the earnings of quarter 4 FY10 and first quarter FY11, it will be easier to make a more convincing call about the earning estimates in the next few quarters. So I think at this point of time the markets are trading close to reasonable valuations, and in the short term it's difficult to see a lot of upside unless of course we have a big earnings surprise coming in.
Shardul, what's the take on LIC Housing Finance or GIC Housing Finance?
To nearly 13%. Stock's not reacting all that much, but that's an interesting development to keep in mind. Varun, we were talking about metals with a technical guest, so let's get your call as well. How are you looking at things? Again, I mean, the stocks being where they are, if you were to buy now, what would you buy? The steel side or the non-steel side?
I think as far as the non-ferrous part of the business is concerned, clearly supply-demand scenario and the kind of inventory levels that we have in different parts of the world, I would stay away from all the metal spaces. The only thing that looks attractive at this point of time is steel. We have seen a very strong attraction in terms of consumer durables, automobiles, and of course now infrastructure catching up. So as far as the domestic steel demand is concerned, I think it is going to hold on quite well. Plus there is expectation of around $80 per ton of price hike coming in next few months. I think that should take care of the incremental hike in coal and iron ore prices. So I think we are very positive on the domestic steel sector, but otherwise I would stay away from all the other metal companies.
Varun, any thoughts on infrastructure and construction at this point? Stocks like maybe L&T or JP Associates from the large cap. L&T has won nearly about 7,000 crores worth of orders over the last 6 weeks on the hydro side alone, and then you have something like a Valecha Engineering which is up 12% today, with the promoters actually issuing shares to themselves to get into development projects beyond EPC. So there's a bit of movement happening in the sector. Anything that you like at this point?
Rahul, I think we are very positive on the whole infrastructure space as such. I think all the companies, be it small, mid-cap or even large-cap companies, we are going to see a huge incremental order book coming in this year. I think last year there was this big disappointment in terms of results and new orders coming in. But I think as it happens with all recovery cycles, first it is the consumption demand which comes back, and the infrastructure and the capex cycle catches on later. So I think this year is going to be all about the whole infrastructure and capex story. So I think as far as the whole power space is concerned, as far as BOT road space is concerned, I think there is going to be a lot of excitement. I think as particularly on the road space, there is an anticipation that a lot of new NHAI orders are going to come in. The minister talks about 20 kilometers a day and all that. So I think the opportunity is huge, and considering the fact that the infrastructure sector has underperformed the market for I think more than 6 months now, this year could be this sector could actually be a big outperformer.
So then pick a stock for us, Varun. What's your favorite pick at current prices?
As I said, we're quite positive on BOT road players. There are a few companies in that space, and the kind of new orders coming in from NHAI, I think more than 1 lakh crores of new orders and new projects are going to be coming up for bidding in next 6 months. So that is again a very good segment to play on. I think as far as the power ancillary space, not the BTG space, but people who are lower down in the value chain, people who are suppliers to the suppliers of that industry, that space again looks very interesting.
Okay, let's take a break. We'll come back and resume.
Your take on the transaction as a whole and the call on the stock, Bharti Airtel?
I think as far as the transaction is concerned, it's definitely a big positive for Bharti. If you look at the Indian telecom market, growth has clearly stagnated. We are already, I think, have close to 50% in terms of tele density when it comes to mobile phone. I think the ARPUs are coming down, and there is clearly a case to chase growth in other parts of the world. And Africa is, of course, the final frontier left, which is still not conquered as far as the telecom industry is concerned. I think there's some very interesting countries and markets which Bharti will get access to. I think Nigeria, of course, is going to be the key. It is the biggest market there, and if you look at the demographic profile and the kind of economic trajectory that this country has, I think people look at Nigeria as probably the next South Africa, maybe the next India, which is going to be a big driver of global growth going forward. So I think the acquisition makes a lot of sense. Of course, there are concerns in terms of the valuations at which Bharti has gone in for the deal. I think one would really need to watch out as to how good Bharti is able to execute when it comes to rolling out the strategy on the ground, considering that the population density in that part of the world is far lower as compared to India, and therefore the capital expenditure required to reach the same number of subscribers would be quite high. But I think from an overall perspective, from a macroeconomic perspective, things it is definitely a positive transaction. As far as the stock price is concerned, I think we are still 4 to 6 quarters away before telecom stocks start performing again. We are still looking at a cutthroat competitive environment in India, and I think Bharti will struggle at least for a year or so before the operations in Zain start adding value to the shareholders of Bharti. So I think we'd stay away from the telecom space as a whole at this point of time.
Varun, any thoughts on DQ Entertainment and the listing that took place today?
Rahul, I haven't had a chance to look at the IPO, so I won't be able to comment on it.
Respect that. Let's just turn focus to a lesson.
Here's those details, Priyank. So that's some news from the shipyard space along with Pipavav. Varun, back to you with Reliance Industries. What's the call? People seem to be, veering towards the view that the worst of the cycle is over and Reliance should do better from here on. Do you agree?
Well, I think GRMs have definitely started looking up for last few weeks. I think I would want to wait for a little more time before there is a definitive call as to what is the trend as far as the GRMs are concerned. I think the bigger concern is that there is new refining capacity which is still going to come up in Asia and other parts of the world, which is going to lead to further pressure on the refining margins. So I think I would want to wait for some more time as far as the GRM part of the business is concerned. And I think as far as the acquisition part of the business is concerned, I think the Reliance would definitely would have to go out and go in for a big acquisition if it wants to deliver growth from in a medium to long term perspective. So till the time we have a big acquisition, and that too in a value accretive manner, I would be a little cautious on the stock.
Meanwhile, the Nifty is marginally below 5,300, 52.98 at this point. I wonder if you can just flip that around with the Reliance intraday graph and just take a look at it. Those are some of the big losers on the Nifty. If you can just sort of superimpose the Nifty intraday with the Reliance intraday and see whether Reliance has contributed at all, that is the Reliance intraday graph. So that's where the pressure is coming in from. Reliance Industries has done about 0.7%, and that's exactly the place from where the Nifty has started cooling off. We were just discussing that, Surbi and Varun, on Reliance Industries. You can get a sense of how important it is for this market to stay above 5,300 and Reliance Industries to be participating as well. Varun, any thoughts on Tata Steel and SAIL?
Well, as I said, it is very positive as far as the domestic steel companies are concerned. The demand has held on quite well. I think going forward also, the demand should continue to rise, considering that the capex cycle is turning. And I think as far as the European demand is concerned, I think there are clear signs that things seem to be turning around at Chorus. And this quarter, the company has given a guidance for a positive EBITDA coming out from Chorus also. So I think if Chorus turns around, it's going to be a big cash flow throwing business for Tata Steel. So we will continue to be positive on the stock.
Varun, just hold on. I have to talk to you about that big pharma rally of last week as well. But we've got fresh news coming in, and my colleague Divya is joining in with the latest that's happening at New last week, especially mid-cap pharma. What's the advice? Should one be buying into companies like a Piramal Life Sciences, like a Suvin? Suvin's announced some news today itself, or should one stay away considering the run-up?
I think as far as the opportunity for the contract manufacturing is concerned, of course there is going to be a big opportunity that is going to open up. And we look at US, UK, and even Japan. All these countries have a growing population and increased healthcare spend. I think the governments in each of these countries have been trying very hard to bring down the healthcare costs. One way they would want to do is to have increased focus on generics as compared to branded drugs, because generics are going to be far more cheaper as compared to the branded segment. So I think those Indian companies which have a significant portion of their revenues coming up from the contract manufacturing piece of the business, we will be quite positive on that. Now, as far as the contract research part is concerned, we will be a little careful on that. I think the market is already, giving a significant upside to, and expecting a positive outcome from various clinical trials and contract research opportunities, that the various life sciences and biosciences companies are doing. So I would tend to stay away from that. But I think the companies which are very strong as far as the domestic formulations are concerned and have a good piece of contract manufacturing, we would be positive on that.
All right, Varun, we'll leave it at that. Good speaking with you. Thanks so much as always for taking time out and joining us. Varun Goel there from KC Securities with his thoughts on the markets.